Hi, good evening to all. Today's topic is all about how to prepare the trading account, P&L account, and the balance sheet statement. To prepare these statements, we have some information given here through which we are going to solve this problem. It comes under the ratio analysis topic of management accounting. So important in exam point of view. Directly we are moving forward to the solution. First we have to calculate the current assets and the current liabilities. To find these values, we have the information about the current ratio as 1.8 is to 1. So 1.8 for current assets, 1 for the current liabilities. We know the formula of working capital equal to current assets minus current liabilities. If we subtract 1.8 minus 1, we can get 0.8. Working capital is also known as the net current assets. We have the value of net current assets in the problem. If we divide the 1 lakh by 0.8, we can get 1 lakh 25,000. It is our current liabilities. If we add both current liabilities and working capital, we can get current assets as 2 lakh 25,000. Next, we need to calculate the quick assets and the stock. To calculate these values, we have the information about the liquid asset, liquid ratio as 1.35 is to 1. We know the liquid ratio formula is it is equal to the quick assets minus the current liabilities. Quick assets we have to calculate, current assets just before we have calculated as 1,25,000. If we cross multiple this, we can get the current asset as 16 lakh 8,750. To find out the stock we need to subtract the quick assets in current assets. Current assets minus quick assets, we can get stock. Current assets we have calculated as 2,25,000. If we subtract the current assets in quick assets, we can get the stock as 56,250. Next, we have to calculate the COGS, cost of goods sold. Cost of the goods sold, we have the information about the stock turnover ratio is equal to 5 times. Stock turnover ratio formula is GOGS by closing stock. It is equal to 5 by 1. If we cross multiple this, we can get the COGS as 28,000, 2,81,250. Next, we have to calculate the sales. To calculate the sales, we have the information about the gross profit. Gross profit of 25%. If we assume sales as a 100%, we know the formula of sales equal to the COGS plus the gross profit. Actually, this formula for the GOGS equal to sales minus gross profit. If we modify slightly, we can get this formula as sales equal to COGS plus gross profit. If we assume sales 100%, in which gross profit is 25% is given in the problem. If so, COGS would be 75%. We know COGS value as 281250. If we divide by the 0.75, we can get 3,75,000. It is our sales value. If you subtract these two values, sales and the COGS, we can get gross profit as 93,750. So this final sales value is na 3,75,000. Next we have to the calculate the debtors. To calculate the debtors, we have the information about the debtors na debt collection period as na 36.5 days, through which we have to calculate the debtors turnover ratio. To calculate the turnover ratio, we need to divide the number of days in a year as 365. Divide by 36.5, we can get a 10. It is our turnover ratio, debtors turnover ratio. Debtor turnover ratio formula is sales by debtors. Just before we have calculated a sales value as 3,75,000. Divide by the debtors equal to 10 by 1. If you cross multiple this, we can get the debtors value as 37,500. Next we have to calculate the cash in hand. To calculate the cash in hand, we have the information about quick assets as actually we have calculated quick assets as 16 lakh 8750, in which debtors and the cash included. To find out the cash only, we need to subtract the quick assets minus debtors. After that we can get a cash value as 13 lakh 12,050. Next we have to calculate the net profit. In the problem, said as net profit of to paid up capital. So paid up capital is 3 lakh. 3 lakh of 20% we can get 60,000. It is our net profit. Next we have to calculate the fixed assets. In the problem, fixed assets to shareholder equity as 80%. We know the net current assets formula equal to the shareholders funds minus fixed assets. Shareholder funds is always 100%. So net current assets is 20% is given here. So net current assets value is 1 lakh. If we divide by 0.2, we can get 100% as 5 lakh. It is our shareholder funds. So if we subtract the shareholder funds minus net current assets, we can get the fixed assets as 4 lakh. It is our fixed assets. So all values have calculated. Now we are going to prepare the trading account, P&L account and the balance sheet. Here I have written roughly for the understanding purposes, but in the exam you have to prepare in well manner, then only you can get full mark. The presentation is more important in exam point of view. Trading account and P&L account, we can prepare them together. So first is particulars, rupees and particulars and rupees, debit side and credit side. It's all noun. First we are going to write down the debit side. First to the cost of goods sold 28,000, 12,050. Next we don't have any values trading account only the operating activities, so it doesn't have any values. Only we have the cost of goods sold, that only we have to write. We have to write the debit side. Whereas as credit side, we have the sales value 3,75,000. If we subtract 3,75,000 to the cost of goods sold, we can get the gross profit. The gross profit directly goes to the credit side of the profit and loss account, that is 93,750. We go just before calculated the net profit. If we subtract 93,750 from net profit, we can get the expenses. It is a balancing figure as 33,750. The net profit goes to balance sheet liability side. Balance sheet for year entered. Liability side share capital. Then we have to add the profit 60,000. Current liabilities we have calculated as 1,25,000. Fixed assets is 4 lakh and current assets is 2,25,000. Or else we have to we can write as current assets as a heading, under which we have to write as stocks, debtors and the cash in hand separately. If we add both the fixed asset and the current assets, we can get the value 6,25,000. But is here we can get only 4,85,000. Under the 4,85,000 minus the 6,25,000, we can get 1,40,000. It is our resource and surplus. Thank you. We will see you again with another session. Until then, stay tuned, stay blessed. Bye.